The New Orleans Conference, the world's greatest investment event.
Ladies and gentlemen.
Okay, you're all getting settled. This is going to be a fun rock and roll session. Lots of happening in the markets. The market's up 350 points and now down 200 and some points just because Larry Kudlow said there's no trade deal with China. That's a very jittery market. A lot of technical traders would say, you know, it was just an excuse. The market was headed lower. A lot of people are saying that. I do want to start off, one of the things that I did in preparation for this panel was to listen in on our panel last year, our economy panel, and of course not everyone was on the panel, but Peter and Dennis, you were on the panel along with Judy Sheldon and with Peter Schiff. So now we have Jim Grant taking the place of a woman and a man. So that's a...
I think that's not allowed these days.
I think anything goes today, from what I've heard. So we're delighted to have you together. But in listening to what we talked about last year, Dennis, you actually mentioned the new Crown Prince, Mohammed bin Salman, by name, and that his name has come up in the news very big time lately. And I know, Dennis, you have some inside information there in what happened and to what extent this Crown Prince engineered the gruesome murder of the Washington Post reporter Jamal Khashoggi. And before you tell us something about it, I want to tell you all an exchange I had with Tucker Carlson, who's a friend of mine, you know, Fox News, and he spoke recently here at the New Orleans conference. So I emailed him and I said, Tucker, what is it? Why are you not covering this? You know, it was front page everywhere, and CNN and MSNBC and even lots of Fox News had it as the major story that was happening and what impact that would have in the United States. But Tucker didn't have hardly anything on it. I was saying, and I asked him, why did you do this? And here's what he said. He says, no, I don't think the death of a Saudi national at the hands of the Saudi government is a huge story. Now, is sometimes the press just out of it and don't really know what's going on? I mean, isn't this really, Dennis, a huge story? Isn't it true that the oil price fell sharply after this occurred? Now, maybe it had nothing to do with it, but I suspect it had a lot to do with it. So tell me, what do you know about this Khashoggi affair, and is it going to bring down the Crown Prince? I mean, he got a standing ovation at his investment conference after murdering this guy. So what's your take?
Well, first of all, what amuses me and amazes me about the press coverage of what has happened was that Khashoggi was made out to be this icon of freedom of the press. He's anything other than that. You have to remember that this fellow has been involved with the Muslim Brotherhood, a very arch Islamic organization for the past decade or longer, and clearly the Muslim Brotherhood is troublesome to the Saudi royal family. We shouldn't be surprised that Khashoggi was, I was surprised it took this long to have him disappeared of some sort. The manner in which it was done clearly was, how do I want to say this, ugly. He was tortured, his fingers were pulled off, his eyeballs were cut out, then he was chopped up into little pieces. I mean, it's just unbelievably, utterly uncivilized. Whether the Crown Prince gave the order to do that or not, in those instances, it's usually something along the lines of, this man has been bothersome to me, take care of it. And the Major General Assiri appears to have been the fellow who has been responsible and will take the blame for it. Will this bring down the Crown Prince? I have my doubts. There are some interesting circumstances where the gentleman who had been passed over as the Crown Prince, the king's brother, who was the last of what's known as the Saudiri Seven, has returned from exile in London and has returned to Riyadh. Now that's either going to be that he will bow down and pledge allegiance to the Crown Prince, or he may actually have been called back by others with his safety having been assured probably by the United States government and by the Saudi royal family itself to perhaps replace the Crown Prince. I hope that the Crown Prince is not replaced. Quite honestly, I think he's going to be an important and seminal figure for the next 50 years or so. He is not bullish of crude oil no matter what happens. In fact, he's one of the few people who understands that probably 50 years from now, crude oil sells at zero, not at some astronomical price, and has gone out of his way to modernize the company or the country. But the fact that our news media played up Khashoggi as being an iconic figure of freedom of the press and liberation, they missed it completely. And you have to give Khashoggi, you have to think what an idiotic move it was for him to have visited the Saudi embassy in Turkey. I suspect that the Turks understood who he was and agreed to this capture and kill. Uncivilized though it might have been, but we shouldn't have been surprised by this fact.
Yeah, and listen, this decision, maybe they miscalculated what the impact would be of this gruesome, barbaric act.
And it was
I
barbaric.
mean, it's one way to just shoot the guy, and another thing to torture him the way he did. And, you know, this is the 21st century. Is anybody acknowledging the fact that barbarism should be out, beheadings and so on?
This was medieval.
This was medieval,
This was
exactly.
medieval.
And the Crown Prince is responsible for Saudi Arabia losing billions and billions of dollars in revenue, is he not? So surely there must be...
He's also waged wars against Yemen, which the Saudis should have been able to win that war in 2 weeks, and here we are 5 years on into the war. It's costing a fortune for the Saudi government to continue to wage it. Plus, let's be honest, he jailed several hundred of his own relatives in the Ritz-Carlton last November, and didn't let them out until they paid back several $100 billion to the Saudi treasury. So the guy is not above doing the unusual. Do I think that he's actually gave the acknowledgement, go kill Khashoggi? I doubt that, but one knows how these sorts of things play out.
But they do allow women to drive now, so they have made progress.
Nice? Isn't that nice?
Yes, they've made progress. So this is an incident, but where is this going? In other words, it's going to be business as usual. Oil prices continue to decline.
If the barbaric nature of the killing had not become public, it probably would have been business as usual. But now that it's public nature, public knowledge of how barbaric this circumstance had prevailed, had existed, it probably won't be business as usual. So it's going to be very hard for the United States to continue to sell several $100 billion worth of military equipment to the Saudis on a consistent basis going forward. That's where the problem shall lie.
So it could have a good outcome ultimately in civilizing the Middle East.
Let us hope that it civilizes the Middle East. I'm not going to hold my breath awaiting that fact.
All right, so next question. Peter Boockvar, by the way, I love your newsletter title, The Book Report. That's a pretty good title.
Thanks.
Is that for general consumption, or is this for institutions, or what's the purpose of your newsletter?
A combination. Anybody who's interested in reading about the daily goings-on in the economy and the markets.
So your point that you made last year, for those who were not here, just by show of hands, how many were here last year? I heard, well, quite a few, maybe half. So you made a prediction, which turned out to be accurate. You said the big news, just to refresh your memory, the big news for this year, for a year from last year's conference, would be the tightening of monetary policy and the reduction in the assets that the Federal Reserve has. That they build up QE, and now it's coming back down, and as a result, we're seeing higher interest rates, as well as monetary policy that seems to be tightening. Even M2 is not growing as fast as it used to be. So that's more or less a summary of what you were saying. So that's been an accurate prediction. However, right at the end you said, and this will cause gold to soar, which obviously never happened. So tell me, why would you think that monetary policy that's tightening would cause gold to soar. What was your thinking on that?
Well, two things. When you look at previous bull markets in gold, it was in a time of rising interest rates. In the late 70s and through the mid-2000s, Alan Greenspan raised rates from 1%. By the time he got it to around 4 and change, gold had almost doubled. So my estimation a year ago was, yeah, we're going to see this tightening, we'll see a rise in rates, but I know where this will eventually lead. And it will lead to a stock market itself, it'll lead to an eventual recession, which would then end the tightening cycle and eventually lead to an easing and a rise in gold prices. I still believe that December 2015 was the bottom in gold, which did coincide with the Fed raising interest rates. So if you stretch out your time horizon a couple of years, gold is up 20%, and the Fed funds rate has gone from 0 to a quarter to possibly next month 2 1/4, 2 1/2. So I would consider that a pretty good performance, and I expect the next leg up in gold will be at some point next year when the Fed blinks and the dollar sells off, and that'll be the next catalyst for the metals.
Blinking, you mean that they will decide not to raise rates or may even cut rates?
Even just saying we're going to take a pause will be enough to cause a sell-off in the dollar, which would then help the metals. And it's inevitable that we get to that. It's inevitable, typically, where rate hike cycles go. A soft landing is a very rare occurrence, and the Fed is getting deeper into this tightening cycle.
So let me test you a little bit on your statement that the Fed raised rates in the 70s. Actually, in real terms, they were still negative.
Yes.
Inflation was worse than interest rates. Interest rates were
Correct.
kind of catching up. So you had negative real interest rates, and that's why gold went up. In the 80s, you had just the opposite. You had real positive interest rates higher than inflation, and what happened to gold? It fell down. So I would argue that this should be a case for gold declining because the Fed is raising rates pretty aggressively.
Well, the mid-2000s also, real rates were positive. So the Fed was, I see that situation somewhat
And that
similar
was the
to
bottom
now.
of gold, that's true.
Yeah.
So, Jim, you were not here last year, but I've been reading up on your views on CNBC and Fox News, perhaps, both?
No.
No? I thought it was CNBC you were on. Maybe it was another network. But
I'm a literary fellow.
this is where you said treasuries are not safe? I thought that was just this last couple of days.
Right. Well, may I?
That was on CNBC, right?
Right. That was the headline. So the question was, what's a safe investment? Or treasuries. So the moderator said, even safe investments like treasuries aren't appreciating. And I said that there ain't no inherent in anything, that nothing is inherently safe or inherently risky. It's a matter of price and value. And that when treasuries seem riskiest, when they were yielding the most, in retrospect, that was when they were most value-laden and most desirable. And muscle memory is a very potent thing in markets, and 3.5 decades of falling rates and appreciating bond prices have impressed the world with the idea that this particular asset goes up. That's what it does for a living. Bonds go up. Hence the idea they are safe by nature. And I challenge that, and I think that they, at these levels, it seems to me they are, if anything, they're inherently unsafe. They're inherently, but I think they're rather unsafe.
Yeah. So
The yielding, I mean, at this point in the cycle, we have a respectably growing, relatively growing GDP with the federal budget deficit in excess of $1 trillion, and with a negative yielding federal funds rate. So that's something you don't see every cycle.
So if the question is, treasuries have often been a safe haven. During a crash, bear market, people go to either gold or cash, and they've been going to treasuries.
Right.
More than they've been going to gold.
Correct.
And you had this massive sell-off in October, but this time, were treasuries a safe haven? Maybe not this time. Maybe cash, pure cash was. it didn't seem like you saw a rally in Treasury securities like you normally do during this October period. Do you agree with that?
Yeah, that's true. Yeah, that's certainly true.
So something's changed.
You actually saw a sell-off. Yields were higher in October, both on the short end and the long end. So there was some buying late in the month, but Treasuries were down on the month.
Right, so it was not a safe haven as it normally is, and now we're looking, and maybe gold, you said gold has gone up a little bit. The gold stocks have not, however. Gold, and so that almost suggests that the miners, the gold bugs think that maybe this is just temporary or something. There doesn't seem to be a huge rush into gold mining stocks, even though they're going into gold as a haven. And they didn't go into Bitcoin either, I noticed. Bitcoin really didn't do anything, and that has been viewed as an alternative to gold. Dennis is shaking his head saying, no?
No, Bitcoin is an alternative to nothing. I'm a great proponent of the blockchain. I think the blockchain is a brilliant idea. It will change the manner in which we trade everything. It'll change the manner in which we trade container ships of goods and services. It'll change the manner in which we trade stocks. It'll change the manner in which we trade houses. But Bitcoin, and we have to differentiate between Bitcoin and the blockchain. They tend to become synonymous, and they are absolutely not synonymous. They are utterly and completely different circumstances completely. There may become a time, probably not in my lifetime, when Bitcoin is transactionable where you can buy a house with Bitcoin, but it's not going to happen until Bitcoin absolutely falls in value demonstrably longer and goes quiet and somnolent and doesn't change price for months and months. Then perhaps I shall be interested in Bitcoin.
Either one of you want to comment? No. Either one of you agree with this nihilistic view that Dennis has regarding Bitcoin? By the way, without Bitcoin, you would not have had the blockchain. Bitcoin created the blockchain. In order to have Bitcoin, you had the blockchain. So they are very much a part of each other.
But they will differentiate.
But one can differentiate. And I'm looking forward to the day when we can put everything on the blockchain, transactions and stock transactions, and Patrick Byrne of Overstock is trying to do that. Others are involved. I mean, this is a very real thing that most financial institutions are now getting into. And I can't wait for the day when in real estate, a lot of real estate investors here, when the title insurance companies go under.
They will go under.
We don't need them anymore.
That's correct. The only reason you have a title insurance company to begin with is to pass on the legality of the past history of the piece of property that you're owning. Blockchain will give you that past history. The mortgage insurers will disappear. The mortgage industry itself will be utterly transformed. I am a great proponent of the blockchain.
Why will the mortgage insurance business disappear?
Well, maybe not the mortgage
no, title insurance.
The title insurance.
Not mortgage.
Excuse me.
Insurance.
Title insurance.
Title insurance. Mortgage insurance
will probably still be around. Yes.
But title insurance. These title insurance people, they drive me crazy. So it's great to see that. But maybe, and hopefully it'll happen. Probably happen before we get rid of the Jones Act, which has got to be the stupidest act that's Congress ever passed. So I want to bring up the issue of the stock market, and I know some of you are bears. I know, Dennis, you made the case that the market's headed lower, commodities are headed higher. By the way, you made that same prediction last year. I just want to point that out.
Yes, I did.
So timing is everything, and you were a little bit off on your timing.
Well, actually, if you take a look at it from a year ago, or from January 1st of this year, stock prices are actually down, and down rather substantively. Doesn't matter which index you look at, they are down. And if you look at commodity prices, they are up for the year. So actually, over the course of the past year, and much of that has occurred in the course of the past 2.5 months. But nonetheless, year on year, stocks are lower, commodities are higher. I've been right.
So
sometimes you get lucky.
Are you sure commodities are all higher? There's a lot of them that have head lower too.
If you take a look at the average and the only way to take a look at the commodity markets is in broad terms, the averages are higher year to date.
Right, but there's no real bull market.
There's no real bull market.
That's for sure.
I mean, soybeans have not gone. As a Chicago boy, having grown up on the Board of Trade, nothing made Chicago feel better than a bull market in soybeans. I mean, it was just the whole city became ecstatic when beans in the teens was a great chant. You don't have beans in the teens. You don't have wheat rising dramatically.
Dennis,
we have the Cubs now, though.
Yeah, we got the Cubs now.
You and I remember when soybeans were like $13.
Oh, I remember $15 beans.
$15 beans, and what are they now?
$9.
Well, they're moving back up.
Yeah.
So, because they got down to like $4, I think.
No, beans never got that.
Never got down that
Never
low.
got
Around
that low.
Oh, okay.
Yeah.
So I want to talk about the investment grade ratio with the Treasury, or kind of the investment grade, the BAA versus the AAA grading that Moody's does and others. And St. Louis Fed has a chart on this and so forth. And in every recession, in every bear market, you had a flight to safety. And the relationship between junk bond yields and AAA yields, the spread got monstrously larger. This did not happen in October. So is this an indication that this mother of all bull markets, which I'm sure all three of you predicted in the last few years,
No.
Dennis, you're honest to admit that
No, I did not.
You were surprised. You were surprised.
I was. There were times when I was bullish, but on balance, did I think we'd see what we saw in the past several years? No, I did not really.
See, now I do have my newsletter here. October issue, the mother of all bull markets, but I didn't put it on the title until it actually happened. It's one of those things. A lot of our friends predicted the mother of all bear markets. I remember Dick Russell, rest his soul, the last prediction he made before he passed away was we were going to see the mother of all bear markets, and instead we got the mother of all bull markets. Are we going to see, a lot of people are predicting this, bears make headlines, bulls make money. Do you fall into the category that we are headed for an absolute catastrophic disaster that is going to send gold through the roof, but the dollar is going to collapse? All of these predictions that are apocalyptic. Are we going to see that? Jim Grant.
Who would answer that yes?
Well, no, I don't want to name specific names. I did mention Dick Russell as an example, but he's 90 years of age and he had a great career.
90 years is not that old.
Yeah, boy, you know how to play to the audience, don't you? That's great. That's
Mark,
great.
may I help you by asking myself?
But no, seriously.
May I help you by
Ron
asking
Paul,
myself
for
a
example.
question?
Ron Paul has made this
Jim,
prediction.
tell me. What's that?
Ron Paul has made this prediction, our favorite
So
congressman.
what exactly is your question, Mark?
Well, let me repeat it. I'm asking you, Jim.
I'm not sure we have time.
Jim Grant. I'm asking you, are we headed? We've had the mother of all bull markets. Are we now headed for the mother of all bear markets? That's what I'm asking.
We'll know more in 10 years.
Now, Jim, people are paying good money to know the answer to this question. Dennis, do you have an answer to this question?
No, we are not heading to the mother of all bear markets. It will be a standard come-as-you-are, normal bear market that we've gone through time after time. It shall not look nearly as egregiously awful as was the bear market of 2006 to 2009. It may not even be as bad as the bear market of the two bear markets of the early 1980s, and it may not even be as bad as the bear market of 72 to 74. But we'll give back 25% from the highs, and the economy will go into a quiet, modest recession. We've done it before, we'll do it again. Are we heading for the mother of all bear markets? No, not at all.
Peter?
The difference the next time we get a bear market and a recession will be the impotent nature of central bank response. Everyone's used to previous recessions or bear markets. The Fed quickly eases. It's a short-lived downturn, and we go off and on to bigger and not necessarily better things. We're going to go into the next recession with a Fed funds rate that is dramatically below previous peaks. We're going to go into the next recession with balance sheets that are still rather big. We're going to go into the next recession in Europe with rates that are still probably negative, and in Japan, certainly around zero. So that'll be the difference between the next recession and bear market, is you won't have that central bank safety net to bail you out. So anyone looking for the next V bottom in the next recovery after the next recession, it'll be something more of a bathtub type situation, again, because of the lack of ability of central banks to deal with it, because they've already expended so much of their weaponry.
But they will go ahead and do exactly what they did the last time. They'll revamp quantitative easing, and they will aggressively go out and buy Treasury securities, Bank of Japan securities, ECB securities. The fact that they don't have the ability to take interest rates lower is consequential, but the fact that we've already done QE one time, we'll do QE again. It'll be demonstrably inflationary in the end result. But
aren't we headed for, Mr. Grant, aren't we headed for a fiscal crisis with unfunded liabilities? Here we are everyone agrees full employment. We're in full employment, right? Full employment economy. And even Keynesian economists, even Paul Krugman would say we should be running surpluses now. But we're running deficits. We could have $1 trillion deficit next year. Does anybody give a damn? I mean, come on. Isn't this going to head for a fiscal crisis? Or are we just in la-la land? Are we just not having to worry anymore? Deficits don't matter.
You can go on the Treasury's website, and there's a button you can touch. And it will give you the dollar amount that citizens have contributed to the paying of the public debt. And it goes from like 4 million, 3 million. Every year, the sum total of the gifts will be 2, 3, 4 million.
Did Donald Trump write a check?
And this year, it's like 700,000. So not only is this the coldest button issue of the midterms, but the people who customarily donate to the extinguishment of the public debt are not doing so. So no, it is an issue on the backest of the back burners. But I'm not going to repeat what I said only an hour and a half ago. But it seems to me that the question of the integrity of the public credit has been the least negotiable piece of information on Wall Street. No matter what you knew about the deficit, it would not make you 1 penny in a trade next week, next month, next year. But it seems to me possible, not certain, but possible that the public credit will now re-enter the marketplace as a consequential idea in bond prices, because the weight of supply this fiscal year prospectively for Treasury issuance and the disposition by the Fed from paring down its balance sheet ever so gently, that sum is going to be the greatest as a percentage of GDP since 1945. So there's a very heavy weight of supply, and this may or may not possibly, I think it is, the 2 years into a secular bond bear market. So, like that.
So, do any of the three of you remember the 1995 fiscal crisis in Canada?
Where?
Canada. North. Dennis and I were talking about Canada. We have very fond feelings regarding Canada. They're doing a lot better than the U.S. in many categories. In fact, they're ranked higher in economic freedom than the United States now. 1995, Canada had a major fiscal crisis. The Canadian dollar was at an all-time low. They were running huge deficits, and the interest on the debt really drove crazy. In fact, the Conservative and the Liberal Party came together. The Liberal Party complained the interest was so high that they could use, if we didn't have the deficit, we could use the money for social programs. The Conservatives said the interest rates are so high, it's bankrupting us. So they got together, and within a 2-year period of time, they slashed government spending, they laid off federal workers, they balanced the budget within 2 years, then they passed a whole bunch of supply-side tax cuts, and they have had a tremendous run, and Canada got out of their fiscal crisis. So we have an example to the north of our willingness to do this. Is that going to happen in the United States, where finally the Republicans and Democrats can get together and say, hey, we have a crisis here, let's solve it?
one can hope.
Only when the bond market forces that discipline upon them through much higher interest rates. They're not going to do it voluntarily because they see the budget deficit as a percent of GDP getting above a certain number. It's only when their hands are forced, and higher interest expense will be the hand that forces it.
Which is now approaching $200 billion a year, interest on the debt. And when it gets over the cost of the military budget, maybe somebody will pay attention. You know, Trump makes a big point of living up to his promises to his people who elected him.
Well, interest on the debt's about $500 billion, not $200 billion.
It's now at 500 billion.
Is it really that high?
Well, if we got 15,
Well, it's
20 trillion.
Yeah, okay.
2%.
Yeah.
2% is the average borrowing cost on 21
So
trillion
my number
gross.
may be low.
Maybe it's gross and debt.
Yeah.
There's a
And
difference.
what's the military budget? It's 700
$700
billion, right? So once the interest on the debt becomes the largest cost of the budget, maybe then we'll pay attention. But I remember Trump in his campaign saying one of the things I'm going to do is reduce the deficit and even reduce the national debt. So if he's a big believer in campaign promises, why doesn't he do that?
Because that would be hard to do, and that's not what a politician usually.
Well, Larry
addresses.
Kudlow, I know this, Larry suggested, he's the one who promoted the idea and didn't get a lot of media, but everyone should be aware of this, that Trump asked every department to cut spending by 5% because he figured there was enough waste in every department that could be done. So what's happening to that proposal? Isn't that a good idea?
It is.
Certainly. You won't get much argument from this panel on that point.
But you lose elections.
You will lose elections. And you have to remember, a 5% cut, what is a 5% cut? Is a 5% cut from last year's budget, or is it a 5% cut from a 7% increase this year?
Right, so it'll be an increase, exactly.
Yeah.
All right, now, Mr. Grant, you are a student of history, correct?
Yes.
So here's my question.
All right.
I don't know if you've read Alan Greenspan's new book with Adrian Wooldridge of The Economist called Capitalism in America. Have you taken a look at this book?
No, I'm waiting for the movie.
Waiting for yes, that's true. People don't read anymore, they
No.
just watch. That's right. So here's the question.
All right.
Do you favor a Hamiltonian-style strong central government, or do you prefer a Jeffersonian laissez-faire government, and why? Which is better?
Well, let us narrow this down to the fiscal nature of the thing, shall we? It's being a financial theme. So Jefferson, along with his Treasury Secretary Albert Gallatin, was all about the elimination of the debt. And Gallatin was so single-minded that when he succeeded as Treasury Secretary under Madison, and the War of 1812 broke out, he insisted that military operations be subordinated to the program of redeeming the debt. That was bean counting for the sake of bean counting. But Jefferson was all about the redemption of the debt. Now, Hamilton famously was partially quoted as saying that the national debt is a public blessing. But a codicil to that was that only when the means are provided for its extinguishment.
Through the sinking fund.
The sinking fund. The sinking fund was started. This is an idea that had the sanction of Montesquieu and of other great thinkers and the practical imprimatur of Pitt the Younger in Britain. And the sinking fund was a bit of a gimmick, as you know, because you borrow money perhaps at a higher rate of interest than you are paying, than the debt interest, than the interest on which the money you pay is a lower rate of interest than the money you borrow to pay back. Mm-hmm. Or that could be, that was the case. But anyway, the sinking fund was an expression of intent. And the sinking fund existed in this country until 1960. The last securities purchased under the sinking fund were 1960.
Really? Wow.
So Hamilton and Jefferson, in the matter of the debt, were both of the same basic philosophical view, was that it was no good to have. It was okay to have, provided you were not going to roll it over and grow it eternally. And that is what has happened.
Yeah. So Dennis, are you a fan of the Hamiltonian central bank idea? Do you believe that a Federal Reserve is necessary? Or are you like Ron Paul and other wide-eyed libertarians who advocate the end of central banking and going back to the gold standard?
Yes to both. Okay. Yes, I'm a believer in both. I think there is a reason to have a central bank of some consequence. I would prefer that they would be, as a dyed-in-the-wool monetarist, I would prefer that it was almost a central bank that every year on a pre-programmed basis put 4%, 5% growth in the monetary aggregates and let it go at that. But I do think you have to have a central bank there when there are the consequential circumstances that prevailed, such as in 2005, 6, 7, and 8, when finally you have to have a central bank who stands up and says, I'm the adult in the room and I'm going to stop what's going on out there.
But they caused it in the first place.
And I'm not sure that the Federal Reserve was the causer of the housing crisis as much as it was the silliness of granting mortgages to people at 100% of the value of the mortgage.
Remember, the chairman of the Federal Reserve is the chief banking officer of the United States. He knew about the subprime loans. Ben Bernanke knew about it because I saw, he gave a speech at the AA meetings, which I listened to, on bank regulation. And he used the term panic and crisis 34 times in January of 2007. That was a clear indication he knew we were headed for trouble, and he did nothing about it. Nothing.
Well,
he just waited to bail us out at the end.
And yes, he waited to bail us out. But if he had done something consequential to stop the rise of housing prices and to stop the buying of housing and to curtail the housing building business at the time, he would have created the same circumstance. He would have created the same collapse he was fearful of.
Just earlier.
I think that the only thing that the bank could do is what the bank did: wait to see, hope that it didn't occur. Well, when it did occur, step in and say, we're going to do what we're supposed to do as the adult.
Dennis says, we know it never happened in Canada, it never happened in Australia, it never happened in Hong Kong.
They did not lend 100 and 105 and 110%.
They had the prudent man rule.
Yeah,
right.
They handle things better. But Canada right now has a problem because housing prices in Vancouver, housing prices in Toronto have gotten to reach egregious levels, almost equal to what had happened here in the United States in the early part of this century.
No, that's true. All right, we have 4 minutes left. We now come to the question of predictions for next year. See how accurate you can be. By the way, Peter Schiff was on the panel last year, and he was quite accurate in saying, well, we don't know for sure, but he predicted last year that the Republicans would lose control of the House and that we'd go back to gridlock. So it's a week away. What's your prediction for next week and for next year, starting with Peter Boockvar?
I don't really have any strong opinion on next week. I think it's somewhat irrelevant in terms of legislation since Trump got what he wanted in the tax cut. And there's nothing really big legislatively to follow. I think next week could have more relevance to the negotiations with China rather than anything specific to the U.S. I think that the two drivers of this bull market in stocks was dramatic easing, as we know, and historically high corporate profit margins, and both are now reversing. So to me, that's the results of those reversals will dominate 2019.
Okay, Dennis?
I think both sides hate each other. And the amount of antagonism that exists on the right and the left, I think we're going to be surprised how many people actually do go and vote next week. I get very upset when I hear get out the vote requirements. Half these people I don't want voting. And I mean, really, I don't think you should be allowed to vote until you pay taxes. But we're going to get a large number of Republicans and a large number of Democrats to go to the polls. Who's going to win? I have a hard time arguing with the pollsters themselves. Clearly, the Republicans are going to gain control or hold control of the Senate and may actually pick up a seat or two. It's sad when a gentleman as wise as the young man who's running for the Senate seat in Michigan will probably get humbled by the current sitting senator. She's an idiot, but that's another question for another time. And perhaps the Republicans may actually lose 5 or 6 seats in the House. Maybe they hold control. We'll see. It just depends who gets there. What will be interesting to me is to see what happens if the Republicans do hold control of the House. If you get a rally in the stock market that then fails, oh God. That will be devastating. So that's to me what's more important. If the Republicans do by any chance hold the House and you get an overnight rally and that rally fails, that's going to be very ugly, and that's my big fear.
The betting odds right now, if you go to John Stossel's betting site on election, the House will go to Democratic, but the Senate will stay Republican.
How cool is John Stossel?
Oh, yeah, he's fantastic.
I love John Stossel.
Yeah, I agree.
They send him to the hinterlands of television, and he should be on the front pages. He's
Yep.
brilliant
You know,
young
he
man.
never got the popular, I mean, I asked Fox News what happened there, and he never did get the support that Bill O'Reilly and people like that did. But he is a statesman and a great
Yes.
guy. I'll be seeing him tomorrow night. I'll tell him you said that.
Tell him I said hello.
He's going to be at the Reason's 50th anniversary in LA, which I'll be at while the conference is going on. And finally, Jim Grant, what's your outlook for into next year before next year's conference?
Well, my only political viewpoint, which I hold very earnestly, is I'm really bullish on millennia. And my financial prediction
I'm with you.
is that if Uber goes public, it's going to be a great short sale.
All right. Thank you, Jim Grant.
Yeah.
Thank you, Dennis Gartman. Thank you, Peter Boockvar. Let's thank our panel. Thank you very much for the economy outlook. We'll see you next year for that. Thank you.
Jim,
Okay.
an honor to be on the
Yeah.
panel with you, truly.
Thank you, Dennis.